The last video I posted, I was talking about how you can start investing in the stock market, more especially in Nairobi Stock Exchange market. So in this video, I'm going to mention some of the companies which I have bought as an individual, and I think if you go forward and do your research, you may be convinced to buy those shares of those companies. I had 8 companies in mind, but the last one I decided to drop it because after doing some research and learning one or two things about on how you should do your own research in those companies which you are interested to buy, I thought it could not be a wise idea to recommend that stock or to recommend that company. But at the end of this video, I am going to mention that company. You may go ahead and do your own research, and if you are convinced that it's a good company and you should buy its shares, then you should go forward and buy that company shares. So my name is Monsieur Augustine. If you may like this video, you may share, and also you may like, and then you may do some corrections in the comment section. Maybe I may not be 100% on how I will be articulating myself. So the first company which I'm going to mention is Safaricom company. So this is one of the biggest companies in Kenya. I believe it is the largest in terms of market capitalization. It has around 1 point something trillion in its valuation. So it sells currently at around 29 shillings per share. So as I was doing research, this company earns around 1.75 shillings for every share. That's EPS, and which means that the PEE ratio of this company is 16.5, 16.65 around there. And I thought it's a good company. And why should I continue investing in this company? I understand that Safaricom is one of the leading service communication service providers in Kenya. It also is entering the market of Ethiopia. M-Pesa is doing amazing, and there are other things which Safaricom offers most companies are incapable of offering. You can see this is a company which has gone ahead and even started a man market fund. It has also started supplying individuals with gas. It's enabling individuals to access funds, which is also a trap, but at the end of the day, it's providing those services. So that's a company which I can recommend if you are interested to buy its shares or to buy some shares. I do believe it's a company which you should go ahead and invest. Its revenue has been increasing over a long period of time for around, because the app which I used to kind of analyze these stocks is known as TradingView. So I have seen from 2018 it has been offering dividends over over this time frame. It has not it has not missed giving out any dividend. So it's a nice company which I can recommend. The next company is Cooperative Bank. So I am one of those individuals who is a cooperative bank. My first bank account I opened was from Cooperative Bank, was with Cooperative Bank. Cooperative Bank has been giving dividends each and every year for the last around 5 years or 6 years. The dividend yield of this company it's around 7.19. It has also its earning per share is around, not earning per share, but its PE ratio is 4.56, and also it is earning per share 4 shillings 56 cents. So it's a nice company. I believe I should go ahead and recommend that company because this is a company which I've strongly believed I should invest in. It's because of limited resources. That's why I'm kind of climbing the radar slowly. And also the reason why I've decided to invest in Corporate Bank, it's because it has not expanded as other companies in terms of going outside of Kenya. For example, it's only operating in Southern Sudan, and its revenue is increasing each and every year. So imagine if Cooperative Bank goes ahead and expands to countries like Uganda. We have also Tanzania, and we have other East African countries. It would be amazing. So the revenue has been increasing over a long period of time. It has been giving out dividends. So that's why I'm investing in Cooperative Bank. Another company which I believe you should go and do your own research and invest in is Kengen. So Kengen, why I decided to invest in Kengen, it's because we Kengen is the only company which is kind of majorly focused on generating electricity in Kenya. So they have a monopoly in terms of providing electricity. It's also a company which I've seen it constantly been giving out dividends, even if it's not that common. I do understand we are going electric in terms of we have electric cars. Individuals, as living standard increase, they will always require some electricity. So it's a company which I do strongly believe it's going to have high demand in terms of it being in a position to provide electricity to the Kenyan citizens. So I decided to invest in KenGen that's been giving out dividends. The company is amazing. So you should go and do your own research, see what are some of the things which you may like about KenGen and what are some of the things which you may dislike and why would you go forward and invest in that company. Another company which I thought is a good company which I need to invest in is Capacite. I believe I pronounced that name appropriately. So this is a company which has been providing dividends over a long period of time consistently. And also this is a company, the revenue has been amazing. The growth of this company's revenue is amazing. So there are some of the things as I was doing my own research, I thought I forgot to do concerning these companies. If you are doing research on any given company, you need also to see if the revenue is increasing, is also the net profit increasing. So for Capacite, the revenue has been increasing consistently over a long period of time. Earning per share, it's around 3 shillings earning per share. So the BEE ratio of this company is 8.65, and the cash flow has been decreasing over time. It's not that constant, but it's amazing in terms of the growth of assets. There's continuous growth of revenue and continuous dividends, as I've said before. So another company which I thought is an amazing company which we must go ahead and invest in is the company known as Crown. This deals with paints, and as we all understand, from my own understanding, is that individuals are not, they would not stop constructing tomorrow. So it's going to be a company which will always have what, a ready market. So the dividends of this company is around six. The dividend yield is around 6.36. The PE ratio of the company is 6.36, and earning per share is 3. So the cash flow of these companies, more especially in Kenya, is so confusing. It has been giving dividends constantly, and also the revenue growth is amazing of Crown. So you should go ahead and do your own research and find out. And what you need to understand is that these companies, the way I have selected them, I have ensured that at least I have one company from every sector. That is to ensure that I have diversified my risk. So another company which I thought is an amazing company, which had a bad name before, which you should go ahead and invest in, is known as HFCK. So this is a company which has both a banking sector and also it deals with kind of real estate. So the company had a bad name before, but for the last 3 years, the company seems to have turned things around. The debt of the company has reduced drastically. That's one of the amazing things which I got from the kind of financial statements of HFCK. And also since 2021, the revenue of this company has been increasing constantly also. So this is a company which I think most individuals should take keen of it, because this company may end up prospering in the near future, and you may say, why did I miss this opportunity? So there's another company which I may recommend you, which I thought it's a nice company to go and invest in. And I believe there is going to be a lot of kind of, how can I say, a lot of banking sector within this portfolio. So another company which I thought is a good company individual should go and invest in is Kenya Commercial Bank. So Kenya Commercial Bank has been doing amazing. It's going out to go to Ethiopia. I've seen it had some branches in Tanzania, also the Democratic Republic of Congo, Rwanda. So it's a company which you should also give much kind of thought. So the last company which I thought I should mention to you, which I thought initially I thought I should own Williamson Tea because I have been in this place. I have seen its environment, but Williamson Tea, as I saw, its earning per share is a negative. And when I did my research further, I saw that when a company has a negative earning per share, it means it has been losing money. Its revenue is not promising, and even though I have seen its share price as kind of short for the last kind of 3 days, for me, I had an idea that I should buy, and what attracted me to this company is because it has an amazing dividend, but the ratio is not that promising. So I've decided to quit. I am not going to buy this share anymore. And another share which I have bought, but I've kind of now remained in that mode of being quiet, almost slowing down, is the CIC shares. So the CIC shares I have been buying. So I'm going to do some research more to find out its earning per share. Is it amazing? The BE ratio, is it amazing? Before I start investing strongly in those companies. So those are kind of my companies which I thought are doing quite well in the Nairobi Stock Exchange, and I'm going to invest for the long-term purposes. I don't want to be a day trader. So I'd like your thoughts in the comment section. Are those shares something you can be interested to invest in? See you in my next one.